Thank you, sir, for being with us today. It's a pleasure having you.
Likewise.
We're speaking about another crisis in the banking sector, this time in Europe. Credit Suisse and the latest developments for so many crises. And today we are afraid that the bank will be destroyed. But the Swiss bank provided $54 billion. How do you think it will protect the bank currently and in its crisis?
To start with, Credit Suisse comes under one of the major global 50 banks that is part of the entire global economy. So the bank is very much connected with the entire global trade flows, investment flows. So the news of Swiss National Bank giving a 50 billion franc credit facility, the immediate liquidity facility, is no surprise for the markets. This is something that the markets immediately started discounting as the stocks fell yesterday in yesterday's session. But the most interesting point to note over here is if you look at the actual bank financial ratios. So if we talk about the common equity tier 1 ratio or even the liquidity coverage ratio, both these ratios are very well in line with the overall ECB norms, near to about what the other major banks are averaging. So the current sell-off that you're seeing across the entire banking space is more of a sentimental driven rather than the actual equity sentiment that is there in the markets. Uh, if we talk about the overall impact, if you look at the latest Q4 earnings for Credit Suisse, the bank has already lost a huge chunk of deposits. It has already lost a huge chunk of investment banking revenues and all. So I would say the overall precaution has been there as far as the financial sector is concerned.
Maybe the financial sector after Silicon Valley, Credit Suisse in Europe. How this will be a threat or a direct threat? Maybe we didn't think that we will have a financial crisis, but how do you think that one of the biggest or largest banks in the world will impact the financial sector in the future?
Banks typically they are supposed to be a very high beta sector. Again, the banking stocks are one of the most heavily invested across the global economy, the global stock markets. So even if it's a relatively smaller bank like Silicon Valley Bank, or even if it's a big size bank like Credit Suisse, the sentimental impact is huge. But factually speaking, we do not see a major contagion effect at this point of time because the overall the ECB banking sector is well reserved. More than 50 to 60% of the euro area banking deposits are covered under some sort of deposit guarantee scheme or the other. And at this point of time, ECB and the Swiss National Bank are going to do whatever it takes to avoid any big negative impact from this fallout.
Maybe these statements by the Swiss bank is giving some hope on the contrary of the treasury that it's not a bailout but to protect the deposits of the clients. The Credit Suisse tackling are different. What do you think?
Definitely, you're right on this point. This is just one step short of an actual bailout. Now, if you look at the past Credit Suisse history, they have been embroiled in multiple scandals and internal trading errors, like the archaeologist scandal, or even the Greensill trade finance scandal. So it's just a matter of time if something major again blows out as far as the Credit Suisse internal balance sheet is concerned. We are in for a big full-fledged bailout by the ECB and the Swiss National Bank as far as Credit Suisse is concerned.
Also, we would like to speak about the ECB meeting today. How do you think this crisis will make Christine Lagarde change her tone during this time and the monetary policy for the ECB?
We expect at least a bare minimum of 25 basis point with a dovish hold. But looking at the overall language, as far as the ECB members, particularly led by the German central bankers, there is a high possibility of a 50 basis point rate hike with a dovish hold. So the overall tone, the undertone of the meeting is going to be friendly towards the market, especially towards the banking stocks. But they will definitely go for a rate hike today into this session.
Maybe this is what is expected by the markets to increase by 50 basis points. Thank you, sir, for being with us today. It was a pleasure having you.
Thank you so much.
Thank you.